Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lattice Semiconductor Corporation Annual Report. Lattice Semiconductor Corporation offers a wide range of products and services to various industries. The company's primary offerings include semiconductor and silicon-based development hardware products, such as field-programmable gate arrays, FPGAs, and evaluation boards. The FPGAs offered by Lattice are categorized into small platforms like Lattice Nexus and Lattice Avant, mid-range platforms like Lattice Avant-G, Avanti, and Avantex, general-purpose FPGAs including Certus and ECP, and specialized FPGAs such as Lattice Mach, ICE, and Crosslink. In addition to hardware products, the company provides design software that enables predictable design convergence, creation of embedded processor-based designs, industrial automation, robotics, low-power embedded vision, control data security, frontal synchronization, and low-power hardware acceleration. The design software includes tools like Lattice Radiant, Lattice Propel, Lattice Automate, Lattice mVision, Lattice Oran, Lattice Sensei, Lattice Sentry, and Lattice Drive. The company also offers edge AI application software called Glance, which allows users to control the AI and computer vision experiences for various edge applications. Furthermore, Lattice provides standard IP and IP core licensing, patent monetization, and IP services. The company serves communications and computing, industrial and automotive, and consumer markets through its diverse range of products and services. The significant increase in Lattice Semiconductor Corp.'s LSCC stock price over the past year can be attributed to several key news events and financial performance indicators. One of the primary drivers of growth was the company's strong financial performance, particularly its fourth quarter and full year 2025 results. The company reported a 24.2% year-over-year increase in revenue for Q4 2025, surpassing analyst expectations, and provided strong guidance for CONE 2026. The communications and computing segment was also a major contributor to the growth, with Q4 2025 revenue up 25% sequentially and 60% year-over-year. The company's expansion into AI and data center applications, particularly in server revenues which increased by approximately 85% year-over-year in 2025, further fueled the growth. Industry recognition and product innovations also played a significant role in boosting the stock price. Lattice won several awards, including the 2026 Big Innovation Award and the 2025 Global Semiconductor Alliance Award, for its innovative products such as the Lattice Mach X AFAVEN-X TDQ FPGA family and the enhanced Sensei solution stack. Analyst upgrades and positive sentiment also contributed to the increase in stock price. Multiple analyst firms raised their price targets and reaffirmed buy or outperform ratings for LSCC, citing the strong AI/server opportunity and improved positioning. Overall, these events collectively contributed to the significant increase in Lattice Semiconductor Corp.'s stock price over the past year. Lattice Semiconductor Corporation market capitalization of $13 billion is materially smaller than most of its industry peers of roughly $36 billion. Lattice Semiconductor Corporation trades at a higher price-to-earnings ratio of 48.82 times, and a higher price-to-book ratio of 18.69 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 16% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be attributed to several key factors. Market acceptance and demand for existing and new products are crucial, as they indicate a strong customer base and potential for future expansion. Additionally, faster processing speeds, power efficiency, and smaller package sizes enable the development of thinner and more compact end products, leading to increased sales. The ability to quickly develop and introduce new products through reprogrammability and flexibility also contributes significantly to revenue growth. Furthermore, partnerships with foundries and IP licensing agreements can provide a steady stream of income. The company's research and development efforts are also essential in maintaining its competitive position and providing innovative new product offerings. In terms of specific drivers, the success of proprietary technology, stronger demand in data center applications, and increased use of products in AI-related applications across all end markets have been significant contributors to revenue growth. Sales to distributors, who historically account for a significant portion of total revenue, also play a crucial role. On the other hand, primary drivers of revenue decline include shortages or increased costs in supply chain, disruption of distributors or distribution channels, and competitive products and pricing. Cyclical downturns and upturns in the semiconductor industry, changes in demand for products across different end markets, and concentrations of revenue at certain customers and within certain end markets can also lead to a decline in revenue. Furthermore, the company's inability to innovate and develop new products that compete effectively on price, density, functionality, etc., can result in decreased sales. Industry standards and customer needs evolving over time can also impact revenue negatively. The entry of new competitors in the market, dependence on subcontractors for key services, adverse financial conditions of material customers, and inflation or economic slowdowns can all contribute to a decline in revenue. Net income experienced a significant decrease in the early years due to various factors such as decreased demand, increased costs from tariffs and imports, and adverse changes in relationships with distributors. However, there was a notable increase of $34.2 million, 24% increase, in net income from fiscal 2024 to fiscal 2025. Profit margins also declined initially due to higher material and component prices, trade barriers, tariffs, sanctions, and export controls. The decline continued in 2025 due to higher raw material costs and reduced customer demand. However, the gross margin percentage increased by 140 basis points from fiscal 2024 to fiscal 2025. The fluctuations in net income and profit margins can be attributed to various factors such as trade tensions, tariffs, foreign currency exchange rates, hedging activities, cyclical downturns in the semiconductor industry, price erosion, weak demand, inventory write-downs, increased competition for raw materials, and third-party service providers. The increase in net income and gross margin percentage in fiscal 2025 suggests that the company was able to mitigate some of these challenges and improve its financial performance. The company's financial performance has shown a significant improvement in its ability to generate cash from its core operations. One key indicator of this is the operating cash flow, which measures the amount of money generated by a company's business activities. In fiscal 2025, the company reported an increase of $34.2 million in operating cash flow compared to the previous year. This increase brings the total operating cash flow for fiscal 2025 to $175.1 million, a notable improvement from the $140.9 million recorded in fiscal 2024. This positive trend suggests that the company is generating sufficient cash from its operations to support its growth and investments. Management is optimistic about the company's future growth prospects, citing multiple areas where it can increase its addressable market. The company sees opportunities in emerging trends such as servers, infrastructure, and smart devices, and believes it is uniquely positioned to address these trends. To capitalize on these opportunities, management is investing in design software and developing integrated system-level solution stacks. Continued investment in research and development is also essential for maintaining product leadership and providing innovative new product offerings. The company's business growth is expected to be driven by areas such as wireless and wireline communications infrastructure deployments, data center servers and networking equipment, client computing platforms, industrial Internet of Things, factory automation, robotics, automotive electronics, smart homes, prosumers, and other applications. Management notes that the company's financial performance may be impacted by macroeconomic climate, global military conflicts, trade restrictions, and inflationary pressures. However, they are actively evaluating and pursuing growth opportunities through acquisitions, divestitures, strategic investments, and partnerships. Overall, management is confident in the company's ability to adapt to changing market conditions and pursue strategic initiatives that will drive future growth and profitability. The company's financial activities have been marked by strategic acquisitions and divestitures. In terms of acquisitions, a notable example is the purchase of Murametrics, Inc. in fiscal year 2024 for approximately $13.9 million. This acquisition demonstrates the company's commitment to expanding its capabilities through targeted investments. On the other hand, the company has also engaged in divestitures as part of its financial strategy. One instance of this was the sale of certain patents from its portfolio in the past. Additionally, the industry as a whole has witnessed restructurings, divestitures, or spin-offs of business units into independent companies, highlighting the dynamic nature of the market. The company's financial activities have been focused on share repurchases rather than dividend payments. In fiscal year 2025, the company bought back shares worth $100 million. Additionally, it has committed to purchasing up to an extra $250 million through its 2026 repurchase program. This indicates a preference for returning value to shareholders through share buybacks over distributing dividends. Supply chain disruptions loom large. The current business landscape is fraught with potential supply chain disruptions that could have far-reaching consequences for companies. Several factors contribute to these risks, including escalating political unrest and trade restrictions, page 10, imposition of tariffs on semiconductors and products incorporating them, page 11, and geopolitical tensions in East Asia, page 13. Additionally, climate-related natural disasters, page 20, and regulatory requirements related to climate change pose significant threats. The potential for labor market disruptions and rising inflation, page 12, further exacerbates the situation. The impact of these disruptions is already being felt, with global supply chain disruptions resulting in shortages, inflationary cost increases, and scarcity of certain products, page 24. Disruptions to manufacturing and shipping could constrain supplies, leading to operational delays, disruptions, and inflationary pressures, page 26. Furthermore, third-party supply chain providers may reduce or discontinue services, page 22, adding to the complexity of navigating these challenges. That concludes the financial summary for Lattice Semiconductor Corporation. Feel free to comment below, and I will be happy to answer them when possible.